Welcome to the Explainer. Okay, let's talk about the Bitcoin crash. It feels like total chaos out there, right? But what if it isn't? Today, we're diving into a fascinating analysis that says this whole downturn is actually predictable, that it's following a blueprint that's been repeating for over a decade now.
So let's just get right to it. The question that's probably on your mind and pretty much every other investor's mind too. Bitcoin is down, way down, and it is so easy to panic. But is that all there is to it? What's really going on here?
And yeah, that number, wow, a 45% drop from its recent peak. A number like that, it's not just a little dip, it's the kind of thing that causes serious, widespread concern and for a lot of people, just outright panic. And of course, that's exactly what we're seeing play out. You hop on social media and it's just a firestorm of fear and wild speculation. People are asking, is this it? Is crypto dead? It's just a purely emotional reaction. And, it makes thinking clearly feel, well, almost impossible.
So with all that noise, it all boils down to one single massive question for anyone holding Bitcoin right now. Is it time to just get out? Should you cut your losses and sell everything? Well, the analysis we're looking at today argues that to even begin to answer that question, you have to do one thing: separate your emotions from the data. The key, it says, isn't to react to the panic. No, it's to look at the cold, hard historical facts. And this is really the core idea here, the big thesis. What feels like this terrifying, totally random crash might actually be a recurring pattern, a predictable cycle that has, believe it or not, played out multiple times before.
All right, so let's dig in and see what this pattern actually looks like in the data. This is where we move past the theory and get into the real numbers.
Okay, now this is where it gets really interesting. Look at the consistency and how long Bitcoin's bull markets last. We're talking about those long, amazing periods where the price just keeps going up. Look at these numbers with me. 1,046 days, 1,064 days, 1,050 days. They're almost identical. It's kind of crazy, right? And you know what? This pattern isn't just for the good times, the bull runs. The analysis shows that the downturns, the bear markets, they also follow this incredibly consistent timeline. They average right around 371 days each. The rhythm applies to the ups and the downs.
So what's the big takeaway here? The crucial point is that these repeating time frames, they're probably not a coincidence. This analysis says they reveal a really clear, data-driven rhythm to how the Bitcoin market behaves.
Okay, so with that historical pattern laid out as our foundation, the analysis then goes on to make some pretty specific forecasts, some predictions about what we can expect for the rest of this current downturn.
And that brings us to the first major prediction, and it's all about timing. If these cycles really are as consistent as they look, then when? When can we expect this thing to finally bottom out?
Get this, the analysis actually pinpoints a specific target, October 2026. How do they get that? Well, it's based on that historical average bear market duration we just saw, about 371 days. If you project that out, it points right to that month.
So what does that mean for us right now? It means we're only about 30% of the way through this thing, through the typical pain period. There's still a pretty big chunk of the historical bear market timeline ahead of us.
Now, let's switch gears from timing to price. A 45% drop, that feels absolutely brutal, right? But when you put it next to the previous cycles, look at this. They saw drops of 86% and 78%. If history's any guide, we could have a lot further to fall. And that leads to a potential price target for where this all ends. If Bitcoin follows a similar path and has a similar size drop, the analysis projects a potential floor somewhere down in the $36,000 to $40,000 range.
So, okay, we have these predictions about timing, about price. So what do you do with that information? Well, the analysis proposes a pretty clear strategy for how to navigate the next few months.
First off, it zooms in on some of the short-term historical patterns. For instance, did you know the month of May has historically been pretty brutal for the market? But on the flip side, July has often been one of the most reliable green months, frequently giving everyone a bit of a relief rally.
So all of this boils down to a really simple three-step strategy. Step 1, do not trade based on fear. Just don't. Step 2, take a hard look at your own position. If you're losing sleep over this, you might be overinvested. And step 3, prepare.
Because if this analysis is even close to right, that market bottom in late 2026, that could be the next huge opportunity.
All right, let's wrap this whole thing up with the final and, I think, most important lesson from this deep dive into Bitcoin cycles.
This quote just says it all, doesn't it? History doesn't repeat exactly, but it rhymes perfectly. The argument isn't that the future is going to be a perfect copy of the past. Not at all. It's that the patterns, the rhythms, the general feel of it, that's what's likely to echo what we've already seen.
And so, this entire analysis leaves us with one last big, provocative question. The historical data, it points to a potential bottom around October 2026, maybe in that $36,000 range. So the only question left is, will history rhyme once again?